Hey, good morning. It is Tuesday, November 9th, 6:02 a.m. Central Standard Time. There's nothing on the calendar red book today for data, so not really expecting to see anything major happening today in the markets. Take a look at my risk disclosure on my website, please. Trading is very risky. You can lose your money big time, and hypothetical results are not indicative of future results. Hypothetical performance results have inherent limitations. It's on my website. So take a look at the market analyzer. We've got the euro and the yen still in their down move. Crude is coming up a little bit, and I want to show you that divergence on the 30-minute chart. If I can get that 30-minute up. And here's our momentum divergence. And we've got all this room to backfill, to fill in, coming up to our weekly VWAP at 46.36. So I would expect a push back into this, to test this lower deviation on the weekly VWAP at 45.31 at the very least. I'm not saying that we're not going to get a double distribution out of this. I'm just saying this lower boundary is probably going to get checked, 45.31. So let's look at the chart, since we do have that divergence, and see where that is on the daily VWAP. Here's 44.71, so 45.31 is up here at the top of that distribution of the prior day top. So that's probably as far as it would get today. So if that's our range, and we are going to go with that, we're going to be trading against the strategy today in crude. And so that probably means that I won't be trading crude today, because I'm going to be looking for markets that are directionally trending all in the same direction. Weekly, daily, 60-15, like gold, or the yen, or the euro. Crude has a tendency to make its run up the day before the EIA report, so that probably will get backfilled up here. If we do get to the open and this starts pushing down, and my daily, weekly, 60-15 starts showing red again, and I get my base and value red, I will probably take a 10 or 20 ticker, but I will reserve my trading for longer term opportunities, range expansion, to when I can get into a period like yesterday with crude, and I got all four firing off, so that you know that you can sit through those retracements and enter on the trigger. So wait for the retracement, and then as soon as that trigger hits, you can sit there and catch a much bigger move. 64 ticks. Mondays, I'm figuring out, are likely expansion days, because it's at the beginning of the week. So those aren't as big of a range expansion than if that were to occur in the middle of the week. So I'm already picking up on my own strategy and figuring stuff out. Here was a tier 3 that showed some range possibilities that triggered in 80 ticks. And here was another one that kicked in. You had to sit through this big retracement, but this fired off right at the open Got your $1,000 on one contract on that day. And again, like I said, if you just wait for your tier 3 and 4s, tier 2 and 3s, I'm sorry, you've got your base, which is my standard open, close, open, current open, previous close, 8 EMA to the value area. You can change it if you don't want the value area. You can put it back on the mom trend. But I don't need to see the up and downs. I know that price moves up and downs. I would rather see what price is doing inside the hood, so I know which direction to go and I can keep it on my trigger. I can wait for a signal and then move to when do I want to enter on my trigger, and that keeps me out of this chop. I like it. I like it a lot. I like it, I like it, I like it. So I think I showed you all this yesterday, but if you just go back through your charts and look at when your biggest opportunities were for those days, and then trade those instruments on those days, because you're giving yourself the best opportunity for a directional trade, and you're giving yourself the best opportunity to find a market that's trending. And if you can find a market that's trending, you can find a way to make some money from that. Even though price may go against you when you get out for a short stop loss, you can get back in and make that up in a heartbeat. If you even exit. I mean, if you're in a big day down with all 4 going off, you can sit through the retracements with confidence that it's going to come back down, and then you can position back in. Now, that's an advanced trading technique. I do not advise everybody to do that. But if you find that yourself in trouble, you can just maybe lay one off. If you have 2 or 3 contracts, take 1 or 2 off as price goes against you, leaving 1 in case price makes that spike down. But get back in certainly on those continuation triggers. And that's why I like my strategy so much, because I've got my signals separated from my triggers, keeping me out of the chop, so that I'm not chasing the wrong trade as the market tries to lure you in when it's only going to just turn around and slam it back up. How about that? All right. Y'all have a great trading day. See? My system is smarter than those algos. Suck you in? No, it does not suck me in. I wait. I learned. I learned the hard way. Love it. Love it, love it, love it. Wait for your triggers. Y'all have a great day.